Eric Muathe for the weekend of May 17th and May 18th, 2014. Let's take a look at markets here on Friday. So that the US market closed with the Dow up about 0.27%, Nasdaq was up 0.52%, and the S&P 500 was up at the close of Friday 0.37. We see that the VIX was down the most, about 6.8%. Actually, it was a very volatile session. Earlier in the Friday session, seemed like the market was going to close lower, but it somehow found some reason and some way to close positive for Friday's session. Now let's take a look at the market from a weekly standpoint, and we see for the week S&P 500 was pretty much unchanged for the week, which is surprising. You'd think you'd be down. We saw that the Dow ended the week down only 0.55%, and what's interesting is that the Nasdaq ended the week actually positive 0.46% to the upside. Now if you take a look at the charts here, we see that for the week the Nasdaq ended holding the 50 level on the weekly RSI, which is positive, and so now we are trading between the 10-week moving average and the 33-week moving average. So this is a reason for the market to be volatile here as we trade between those two moving averages. If we take a look at the Nasdaq Daily, we see a very well-defined trend line where the market has been bouncing off that trend line. So anything above that trend line is positive. Anything below that is not necessarily bearish, because you're going to have to contend with an upward sloping 200-day moving average. So either support on this trend line, or maybe we get a break and another support level here at the 200-day moving average. On the dailies, we've been expecting support on the Nasdaq on this line here, and as you can see, it bounced off this line after Thursday's sell-off, and Friday bounced off that line. So as of right now, you can say the market is, yes, off the highs, but not necessarily broken, just because it's finding support where it needs to. If you take a look at the Dow weekly, you see that the Dow actually managed to close above 16,478, which is the weekly breakout, and 16,478 goes back to the highest weekly close of December 2013. So we are holding above that. Not the best looking breakout, but at least we are holding above that. So that's something the bulls can take away. And don't forget, weeks ago we found support on this RSI lows line on the weekly. So anything above this RSI lows line suggests a market that wants to move higher. Quick look at the Dow Daily, and we see that we bounced off the 50-day moving average on Friday, which is healthy. We bounced off the RSI lows line, which is also healthy, and we also managed to recapture the area above 50 on a daily basis. So we see that we have resistance. In fact, if you take a look at what the market did here, you'll see that if you're a bear in the market, you have reasons to think the market is going to go down, because you see this daily closing high of 16,576. So the market did actually find resistance here beginning of April, found resistance here, and we moved higher for a couple of days here, but we are back below that general breakout level. So that's not a good looking breakout. Yes, it found support on the 50 level, on the 50-day moving average, but the fact that it's below the previous high is bearish. Also, you'll see that there's topside resistance if you're looking for a bearish case, because if you draw the topside like that, you see that the market hit this level here and seems to have coiled back. And also the break, see this line here which connects the highs. So this line, the break of that line took place here, which was the highs there. And so we found resistance on this level a couple times here, which was this high. We found resistance here, which was this high, and then over the last couple of days we found resistance here, which exactly on that line. So there's some resistance, as you can see, on the daily. So if the market can break below the 50-day moving average, that could be the beginning of some bearish action. But take a look at this line here. oops, there's going to be some support, or at least some attempt at support here on this trend line. And also don't forget that the 50-day moving average holding, and also at some point maybe the 200-day moving average could become support. So the market is, yes, looks like the daily breakout failed, which is bearish, but the market has yet to completely break down, and that's what's confusing and frustrating traders. If you take a look at the transports, which seem to be leading the market, they close at an all-time weekly closing high again, so that's week number 3 of a breakout there. And you can see that we go back a couple of weeks, we found support on this trend line. So anything above that trend line, anything above the 10-week moving average is generally positive for the market. Take a look at the daily for the Dow Transports, and you see that this line here, which connected the highs previously, so we broke out above that line there, and the line has now become short-term support. So as we continue moving higher here on the Dow Transports, and especially if the line, this top side, can continue being support on any pullback, the market continues being healthy. Take a look at the S&P 500 weekly. S&P 500 closed below the previous weekly closing high of 1878, so that's not very good. So that's a failed breakout. Anything below 1878 is probably the early signs of a market that is tired. Also notice that we made an incremental higher high on a weekly closing basis for the S&P 500, which was 2 weeks ago, but yet the RSI continues making lower lows. So that's a very bearish looking weekly chart. And also remember, there's a back test on the weekly that continues being resistance here. So that back test could be a problem. But generally, as long as the market is holding above the 50 level on the RSI for the weekly chart, it should be okay. But you know, if you're bullish, you'd like to see the market take back that 1878 level. If you're bearish, you'd like to see the market hold below that 1878 and continue creeping lower. Take a look at the daily for the S&P 500. You can see here there's a problem because you're making higher highs in price over a couple of months there, and yet you continue making lower lows on the RSI. So the technicals are not following what the market is doing. That could be bearish. But as long as it's holding above the 50-day moving average, the market is safe. Anything above the 50-day moving average, that's a safe market for you. But yes, as far as the dailies making higher highs and the technicals giving you negative divergence, that's not a good picture. Let's take a look at the hourly for the S&P 500. You can see that we were expecting support late Thursday based on this line here, and you can see the market recaptured that line just like we were expecting. So that's why we had a positive close on Friday. So if that continues being the case, maybe the market wants to move higher. One thing we have to always keep in mind is the monthly. We can see that on the monthly, the S&P 500 is above 69.10, which is very good. Anything above 69.10 is a sign of a strong market. You can see the transports are trading with the RSI. That's why they're in the leadership above 68 or 69.10, trading at 78, which is very strong. The Dow is probably one of the only major markets that's trading below 69.10. So if you're bullish, you'd like to see the Dow move back above 69.10. If you're bearish, then this is exactly what you want to see. Quick look at the Nasdaq monthly, and you can see the market is still holding the Nasdaq above 69.10, which is a sign of a bull market. Now, if we take a look at the QQQ, what's interesting here and surprising is the fact that we are holding above the trend line here. That trend line, we're above that trend line, which is positive. Anything above that major trend line, which was this huge trend line going back to 09, the fact that we are holding above that is bullish in my opinion. So the QQQ is carrying this market up 1% pretty much for the week. That's surprising because you'd think it should be down. Remember, a couple of weeks ago we found support on this trend line on the weekly RSI, so that held, which is good. We held above 50, bounced off 50 precisely as we discussed. So I haven't seen a break on this chart yet. So you look for it, but it's not there. If you take a look at the QQQ on a daily, this trend line here is holding, and so there's another trend line on the top side. So we seem to be trading in this conclusion, or at least at the very close to the conclusion of this wedge. We are either going to break out above that wedge or we are going to break down. If you go back a couple weeks, we held support here precisely on this line that I was talking about. So once we held support on the RSI here with the double bottom, which was this general area, we were expecting the market to move higher, and generally it's been moving higher as far as the QQQ is concerned. Now let's take a look here at the Russell 2000. Everybody is saying the Russell 2000 is leading the market lower. I'm not sure, just because yes, there's a trend line break here, which is obvious on the weekly, but there also seems to be other things you can look at, like this general area around 1100 has been support. It's trading around that level. In fact, right now trading precisely at 1100. This is where it's been holding on a weekly closing basis going back to late 2013. But for my money is, if you take a look at this line here, this line has been the perfect entry point in the Russell 2000 over the last couple of years. If you go back to the most recent support on that line was here, which was this perfect entry point, was a double bottom support here, which was this perfect entry point on the lows, slight pullback here, which was this perfect entry point here. So my thinking is that if it can bounce, if it's a big if it can bounce off this line in the coming 1 or 2 weeks, then this is where you want to go long the small cap stocks or the small cap sector, just because if the line holds, that's bullish. On the other hand, if we break below this line, it's going to be the first material break below that line since beginning of 2012, which is somewhere there. So a bounce off that line is bullish. Anything below that line is bearish. There's also a trend line here, this blue line. This blue line was perfect entry point. When you broke out above the blue line, there was the perfect entry point here. Now remember, this had been resistance on this level had been confirmed over many months. So once we broke out here beginning of 2013, this perfect entry point here coincides with a break above that blue line there. Now this blue line has turned into support here, which was this lows and nice entry point there. Now we are back in this general area. So if the blue line can hold the Russell 2000 on a weekly basis and it bounces off that line, off these two lines, this line here and this diagonal line here, then this is where around 1100 is where on a weekly basis one might want to consider taking a long position in the market. Now that's surprising, but that's just what the charts are saying. If you take a look at the VIX on a weekly chart, you see that for the week the VIX is down, surprisingly, or at least I guess depending on how you look. So that's not good. The fact that the VIX is not strong shows that the market should be generally safe on the upside. If you take a look at the VIX daily and draw it on the RSI, draw a line connecting the tops, you'll see that generally we hit that top side Thursday, and now Friday we see that the VIX had a significant pullback. So the VIX is not showing signs of strength, which means the market is the one showing signs of strength. If you take a look at the VIX from a hourly standpoint, I'm trying to say, is there's resistance on that top side there, okay? But also notice that the break here, there was a break of that trend line on a weekly, on an hourly basis, which was this break there. And so all we have to do is draw a straight line from that break. And by Thursday, we knew the market was looking like it wanted to move higher just because the VIX hit that level there. So that's why I sent out a video to subscribers that would be a reason, or at least would be the environment that would send the market higher on a short-term basis, and that's what we are getting here by the close of Friday. Now let's take a look at Apple here, and we can see that we all know that 1600 has turned into resistance ever since the break. It hasn't really moved above ever since the break here of in late 2012. We haven't seen a move above 600. If it can move above 600, then maybe it could have a nice run, but for now that seems to be resistance. Even on the daily you can see that this 600 level has become resistance. If it can move above 600, then that's good. If it cannot move above 600, then I would think that it's gonna stall and eventually pull back. Especially, I've been talking about this monthly chart. Let me show you a long-term monthly, and I just believe that if you take a trend line like that, I've been talking about that this now has become back test. So if this continues being resistance and the stock can't move above 600, and you go back to beginning of 2012, you'll see that 600 has been resistance even going back to this general period here. So, and also now we see the back test of this line here. So it does need to take out that 600 if the stock is going to do well. Also, if you take a look at this longer term monthly view, you see that there's a trend line here on the monthly, and see this has become a backtest area. If it cannot move above this line on the RSI on the monthly, then that becomes confirmation of resistance. You can see that this line has been very successful in launching big moves in the stock, was uniform activity below the line, back above it. So this became a buy point here, middle of 09, which was somewhere here. And so now, ever since we broke down on the RSI there, we've bounced off the RSI, back tested it, failed, and then now we are back in this general area. If it cannot move above 600, and if this continues being resistance, then I would say the stock here is seeing short-term resistance even on the monthly charts.